Good morning, everybody. Happy Wednesday. This is the morning show on Stock Market TV. Spencer Israel, JC Parets with you this morning. Steve Strazza is still in Miami at Future Proof. He's off doing his thing. We'll miss him. He'll be back tomorrow, but the show must go on. We will have Kenny Glick join us in a few minutes. We will have James Brody from Honest Capital Group join us later on as well. And we want to talk about charts and making money. So that's what we're going to do. Oracle, kind of one of the big stories in the morning. We'll talk about that. I don't know what charts JC has on his mind. I have a few in my mind that I want to share. Some things I saw yesterday. So that's where things stand. If you're watching us on YouTube, do me a quick favor. I always appreciate the likes. They do help us. Give us a thumbs up, please, and thank you. And on that note, assuming you all did that, everyone in the chat, let's start the show.
All right, we're back. We're back. 2 days in a row.
I know. Whew.
I like the routine, you know? You wake up, you check the futures.
How messed up are you your first day back? Your first day back was like kind of Monday-ish, but it was like later Monday, right? So like how long does it take you to get back into the swing?
You know, it was like it's less about the swing and more about the contrast in conversations. You go from talking to 3-year-olds and a 5-year-old about superheroes and Disney princesses and like, you know, what the sunset is. And then now all of a sudden it's like crude oil and this, and it's just like the contrast in conversations that you have from a family vacation to talking with you and Strazza. And we got James Brody in the house today. Like, how sick is that? James Brody couldn't be more different than my 3-year-old who thinks he's the Incredible Hulk, right? Like, you know, it's just a fascinating, and I've gone through this a couple of times, but when you go, like, I'm tuned into the market, I'm not disappearing, but I'm not having the conversations that I'm having with you guys every day. That's the biggest difference.
Well, so it's both. It's talking to like a child versus talking to a grown up, and then it's also talking to like normies, regular people, versus like us, right? And it's a nice reminder, though, is it not, JC, that the world does go around whether or not, you know, you're watching crude go to 119,
right?
The world is still going around.
Dude, I was at Joe Stonecraft Sunday night. Dow's down 1,000. I'm looking around like nobody here knows.
Nobody knows. Nobody cares.
Like, you're in your own like silo, you know, in our own little bubble. Like, none of the people there, you know, that were there with, you know, it's hilarious.
I remember learning that lesson. What was it? 28? What year was it where we're like, we just pooped into the end of the year? 2018. It was like a terrible Q4, terrible December.
2018.
Yeah. So like tech was just like going down every day, and it's like no one knew why. No one knew why. And I remember going out to restaurants, same as you, and I was like, nobody here cares. Not only do they not know, they don't care. If they did know, they still wouldn't care. The world goes on without you.
No, it's great, fascinating.
Great reminder.
All right. So I got a couple of charts today. I'm curious to hear your thoughts. James Brody, the man, known for quite some time, hung out different parts of the world over the years with him. So that's cool. Can we do a little state of the markets and get to it? There's things moving.
Yes, we can. Our thing is moving this. I think that's the kind of the point, is that they're not moving, but let's talk about it.
I see. All right, ladies and gentlemen, we got things moving. We got things happening. Dow down 1/3% this morning.
Can we talk about the NASDAQ 100 yesterday? Unchanged.
The QQQ.
When is the last time the Qs were unchanged?
It was a 0.000. Wow, that's wild. Yeah, on the QQQs. No, that's a wild close. 0.00. Ryan Dietrich probably has a stat about it. If he hasn't already, I'd be surprised. Oh, Ryan Dietrich's in Miami at Future Proof, actually. So he probably hasn't done it. But had he been at his desk, he would have ran that already by now.
It can't happen more than like once or twice a year, right?
Somebody out there on Twitter land, ping Dietrich, be like, yo, JC's wondering where the 0.00 NASDAQ, look back is. Tell him. Somebody tell him on Twitter.
Okay.
So NASDAQ unchanged yesterday, down 13 bips today. So basically flat today after flat yesterday. S&P is also basically flat, down 10 handles. All right, so you got 30-year bond futures down 0.2%. That's a big one, man. All eyes on bonds, man. How that result is going to be wild. Crude oil up over 4% today, back above 87. Copper down almost 2%, 585. You got gold down 1%, 51.81. You got silver down 3.8%, back down to 86 and change for silver, with the VIX still above 25. Market still pricing in a 1.5% move for the S&P 500. The equivalent in the Dow would be about 700 points or so, So think about that as a normal day currently being priced into the market. So that's what that means to me, which is why I'm bringing it up. In funny money land, Bitcoin down 1%, 69,300. Ethereum, 2023 down 2/3%. Solana, 85.5. Basically flat today with the total crypto market cap. Mr. Spencer Israel, 2.34 trillion is total crypto market cap, up from 2.05. So from 2.05 at the lows a couple weeks ago, 2.05, we're at 2.34, which is down from 4.26, almost double what it is right now at the peak last year. So basically a 50% correction in the total value of crypto assets.
Yeah, it's been not great.
And so what stands out for this morning's futures?
Well, but the fact that Bitcoin has stopped going down is, I think, the most notable thing. Right?
No question, Spencer. You've been hanging around with us too long. I mean,
things can only go up, down, or sideways.
Right, but you got to stop going down before you can start going up.
Usually that's true. Sometimes we get the old V trick, right?
But the V, it looks like a V in price, but underneath the surface, you already see momentum improving. You see breadth improving a lot of those times. So it might look like a V, but it's not a V. It's still a process.
Okay.
You know that, Spencer.
Yeah, right.
You know that, but you got to stop going down before you start going up. Speaking of stop going down.
Yeah.
Slide 3, my good man.
Okay. I have a slide for you as well that you're going to appreciate.
Oh, I love a good chart.
I have a couple. It's not a chart. Well, it might be a chart.
Who doesn't love a good chart?
So wait, you said slide 2? Wait, what'd you say? Slide 3.
We need more maps. I was talking to Rick about it yesterday. More maps.
I don't have a map for you this morning, but I do have a chart or a graphic comparing the US and the UK. That's kind of like a map, but it is not a map. Okay. October 29th to March 6th. We're looking at Mag 7 here.
Yep. So that's when the Mag 7 peaked. That is also actually, curious now if it was also when. No. So that is when the Mag 7 peaked. That's when NASDAQ peaked, tech peaked, Mags peaked, all that stuff peaked. Microsoft down 24% since then. Meta 14%, Nvidia 14%, Tesla 14%. These are pretty big corrections. Some relative strength there out of Google. This is an environment where the S&P 500 is down 1% since October 29th, 1%. So these are, I don't want to say massive drawdowns, but relative to the rest of the market, yeah, you could say they are, big time drawdowns, with the Dow flat in during that period, by the way. So this goes through last week, March 6th. And so if you go to the next chart, so this just goes to show you the Mag 7 in total. Now, if you take that basket of the Magnificent 7 and compare that to a basket of the S&P 500, right, the whole S&Ps, you got some lower lows there at the end of February. Lower lows in that relative performance and dramatically higher lows in momentum, right? So does that mean that the black line, the Magnificent 7, needs to start outperforming from now on? Is that what that means? No, not necessarily. But I will tell you, in my experience, these types of things often show up when exactly that is happening. So, the question, if you think the bull market's got legs, right, and I see little reason to believe that it doesn't, right, then these need to participate. You got $20 trillion, $20 trillion just in these 7 stocks alone.
It's a lot.
A third of the S&P, you got in the S&P 500 is about 60 trillion and change. 20 of that is just these 7. So, if you think that the S&P 500 is going to go to, 8,000, which I do, I think 8,200, I think is what we're looking at there. These need to participate. I got one more that I wanted to show you guys. Here we go. So this continues to play out. Here, throw up the new slide 2 there. So this one continues to play out. I continue to monitor. Just refresh that and put that one up. So where is all of this happening? At a really important level. So you got a cluster of Fibonacci extensions that we've been pointing to here in the show. All going back to the tariff tantrum last year is the 161.8% extension of that. You got the bear market of 21-22. That's the 261.8% extension of that. And then, of course, the great financial crisis extension is right here, too. The 685.4% extension from the great financial crisis. All right here. This 7,000 is serious. And so the fact that the congestion is taking place here is certainly no surprise right at the cluster of these extensions. But I think about what the implications of an upside resolution would be out of this mess. And if you throw up the next chart, there you're going to get your 8,200.
Oh,
there's your 8,200. These are all the extensions going back to the great financial crisis, and there you go. That's what I'm seeing.
Hold on. These are extensions going back to the GFC.
The great financial crisis, the 21-22 bear market, and the tariff tantrum last year.
So 3 different sets of extensions
are clustering right in the same place. Right? So back up and you can zoom in to exactly what's going on there. Right? All that's right there. So, I mean, so that's a level that, listen, some people are like, oh, JC, Fibonacci, Liberace, right? I know. And I probably look at more charts than anybody in the world. There's probably a couple of people that might look at more charts than I do, and I can tell you who they are, and I'm friends with them, right? But I'm pretty sure I can keep up with them in terms of quantity. I'm telling you right now, I'm not here to waste your time. I'm certainly not here to waste my time. I would not be using these levels if I didn't think that they'd be helpful in helping to identify trends, in helping to manage risk, in helping to make, more informed decisions in the market. So I'm just sharing with you guys, right?
Hey, you know who's giving love to technical analysis this morning? The Wall Street Journal.
Shout out Wall Street Journal. That's it. Short technical analysis. That's the top.
They were given love in their Markets AM newsletter.
Stop. I don't believe it.
This is straight from this morning. This is what it said. This is a screenshot, obviously. Spencer Jacob wrote this. Of course, it was Spencer. Smart guy.
Shout out Spencer Jacob.
Yeah. Don't be too quick to dismiss it. If you're a passive investor, you're looking at the indexes. But under the surface, there is more. Aha. Straight from the horse's mouth, JC.
It's more like an X-ray that might pinpoint unhealthy symptoms a bit sooner. Maybe an MRI. I don't know. I don't know, Spencer Jacob. Aren't MRIs even better than X-rays? I don't know.
No. I think they're just different. So shout out to the Wall Street Journal. Shout out to technical analysis. Give him props when the props are due.
Dude, shout out to the Wall Street Journal. Spencer Jacob, come on the show. Get him on the show.
Yeah. The invite
that'd be fun.
The invite is officially out.
If you know Spencer Jacob, you said JC giving you a shout out on the show. Spencer Jacob. Find out his alma mater. All right. So that's what you had to show me that you thought I would like?
That was like the main thing. I have a couple more that are more chart.
Well, let's stick with the media, right? So shout out Wall Street Journal.
Yeah.
And let's give a shout out to the New Yorker.
Oh, here we go.
There's slide 8. Let's remember this. I mean, listen, there was so much oil to go around, right? Trump was chugging out of the barrel, holding it over his head. Extra chubby Donald Trump there. I don't know if you noticed. They added a few lbs. You see that really sticking to him? Rest of the world's burning down behind him. I don't know if you can see that part. So, just so much oil to go around, so much supply. Might as well just drink it. We're just chugging it, just spilling it all over the place, right? It's like champagne and a freaking, after a World Series victory, right? So go next, and then let's see what happened after that. Let's see. This goes through. Oh, look at that! Biggest 1 week gain in the history of the oil ETF ever.
This is one that's probably going to go down. Of all of JC's like magazine stuff, some of it is silly, but this one is
they're all silly. This is silly.
Okay, you're right. They're all silly. Some are more silly than others. This one is going down for the books. This is one that we're going to come back to in a few years because it's too good, right?
I mean, come on, it was so good. And then I wanted one more thing to add.
Yeah,
like obviously, right? Here's the thing. The more creative, because these are very creative. Like these people are very talented when it comes to like designing the cover art. The more creative, the better the signal, right? This is a good one, I thought. Chugging the barrel, chubby Trump. I don't know. I thought that was good. Fat cat Trump chugging the oil.
the timing of this magazine, that basically 4 or 5 weeks later.
Dude, I was here on the show being like, dude, I could smell an oil cover coming. I could smell one coming. We gotta be close, right? Remember?
Yeah, but we only got the one. This is the only one that we got. We didn't get anything, right?
Yeah, but we got 25 Iran ones. I don't know if you saw that this week. Everybody's got an Iran cover. Newsweek, Economist, what's the other one?
Not
the
sure.
New Yorker. The New Yorker's talking about how much money everybody's. Not the New Yorker. The New York Magazine's talking. The New Yorker actually has a good one. It's Donald Trump on a golf cart dressed up as a general. Did you see that one?
No, I didn't.
Dude,
yeah.
So
wait.
good.
Actually, wait. Same idea. As that chart that you just brought up. Let's just look at the crude oil VIX. Right. Just unreal, historic volatility that we haven't seen. I've only seen once in my career or my life as an investor, which is obviously COVID, but just things you don't see every year or every few years.
Yeah, I mean, just look at the at those times, right, when it peaked above those levels, right? I mean, those were times that you remember. I remember those great financial crisis lows very well. Those are, you remember where you were, who you were with, what you were thinking, what you were talking about. I mean, it takes you back to COVID. I remember that very well. We were preparing for Chart Summit. We raised how much did we raise? Like $250,000 for Traders for a Cause, something like that. 250,000. I forget. You can ask them about it, man. That was awesome because I remember at the time, we were killing it because we were short, and all our closest friends were making so much money, like seriously. While literally the world is falling apart and people are like dying, like everybody around me was just crushing, and so like we felt guilty about it, like almost like we were doing something wrong. I mean, we weren't. Like we just doing what we do, we trading, but it kind of felt weird. So like we teamed up with Traders for a Cause, raised a ton of money. And a lot of the technicians who were coming on there, Chart Summit. Shout out to Chart Summit. That was awesome.
I shout out to Chart Summit. Shout out to just charts in general, right? I want to give the charts a shout out and the people that read the charts. We were talking about energy a few months ago at the Chart Summit that we just did. We were talking about energy last quarter. Right, early last quarter, I believe. Right, we were talking about it, maybe even in September. And Jason and Sam never stopped talking about it. JC was on the commodity super cycle train 24 months ago. Right, we did a live stream I want to say March of 24, maybe it was February, talking about commodity super cycles. And you saw what happened to gold, and you saw what happened to silver, and you see what's happening to oil, right? And so just huge shout out to the charts. Shout out to the people that read the charts, like JC, like Steve. I don't know where I would be without you guys and without this. And I'm just grateful that we have you here to read the charts for us and to help us find ideas. And that's what you guys do every day. So
no, and Spencer's. Yeah. I appreciate that. And Spencer has been a big consumer of all the content that goes through Stock Market TV, and you're actually listening and taking notes and paying attention, and we appreciate that. You care. You're like, we show you things, you're like, oh, and then you think we're full of shit, and then afterwards,
well, look, I'm not like it's difficult, right? I mean, like there's a fire hose of information coming at me every day. I try to read everything we put out. I literally cannot. I don't have the time in the day to do it, but I wish I could. I wish I could consume every idea under the sun. It's not possible. I have to like filter it down somehow. And yeah, you guys put out a ton of content, right?
Listen, it's helpful having different guys doing different things, right? True. As one person can't do everything, right?
Yeah.
So like I'm good at like, I'm really good at longer term charts and top down, and I'm good at magazine covers. Here, throw up that slide too. Like we all have like our place, and with the powers combined, it's a lot more powerful when you combine that. Throw up. This is what I was talking about, guys. This is the freshie coming in from the New Yorker. Very creative. I mean, they all got Trump Iran wars. Can you throw it up, guys? They all got Trump Iran wars on the cover. The New Yorkers got it. Newsweek's got it. But you got Mar-a-Lago in the back, and General Trump here on the golf cart, right? I mean, that's good. I don't know who that guy is next to him, but he seems like important, and they're making fun of him.
That would be Pete. That would be Pete Hegseth.
All right, so I don't know who that is, but yeah, they're making him look awfully tiny. Is he like a tiny little?
I think a credit to them that I could easily recognize who that is.
Yeah, I don't follow the politics, but I know who the general is with the. You got to love the pipe, right? You got to love the pipe. So the golf clubs in the back, of course, a classic, right? Great.
Yeah.
Great.
Anyway, wait. Here's the point that I was making, and then we'll bring on Kenny, and then we'll bring on James after that. But all these guys do is look at charts pretty much all day long, and then they use the charts. They're not doing it for their health. They're using the charts to make money, right? This is what JC does. This is what Strazza does. This is what everyone that we talk to does, pretty much, right? So if you missed it, if you missed Steve's live event last week, he's doing an encore with JC on Thursday. I'm going to put the link up on the screen, totally free. How these guys use charts to find fast trades. That's it. The link is on the screen. It's allstarcharts.com/Wave Trader Encore. All one word, Wave Trader Encore. That's going to be Thursday at 4:00. If you were at Chart Summit, if you watch the morning show, if you see these charts being discussed every day, and you're like, all right, I see the charts. How do I take it and translate it to a trade? That's exactly what they're talking about. Okay. So Thursday at 4. It'll be 4:00 and 4:15, and then it'll be a party after the close. We'll talk about how to actually take these charts and translate them into trades that can make you money, because that's what we're doing here. The charts are great, but charts by themselves are really just information. You got to then take it to the next step. You got to do.
I'm looking forward to that myself, guys, because me selfishly, I was away last week, so I was looking through charts because I can't help myself, and I generally enjoy it. Right? Like just because you're on vacation doesn't mean you need to stop doing something you enjoy. So like I was doing the charts, but that day-to-day feel, like I missed that last week. So Thursday, I'm going to be in there taking notes with the rest of you. like having Strazza like really fill me in on like what's been going on over the last couple of weeks, where the opportunities are. These are fast money trades, right? So I can't wait to see them.
Yes. So it's going to be Thursday at 4 o'clock right there. allstarcharts.com/wave trader encore. Totally free event, by the way. All right. Let's bring on the Warlock.
Because we're riding the waves. Is that what it is?
I was saying the other day to someone, I think like Strazza needs to just like lean in obnoxiously hard to like the surfing analogy. He hasn't done that yet. I don't know why, but I would just be like, every idea I have, everything I'd say would be related to surfing.
Next time you're at the beach, watch the tide and watch the waves. You've got the big tide, you've got the intermediate term waves, and then you got the little trickles, right? Like, talk to old school technicians. They'll always like reference the ocean and the tide as the multiple time frames of the longer trends and the intermediate term trends, and then the day-to-day noise, right? Like the comparison between those two is as old school as it gets. So the fact that, it's being called wave trader is awesome.
Speaking of the old school, we're bringing on Kenny Glick. See what I did there?
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Oh, speaking of old school, the grandfather of day trading, Kenny Glick.
What's up? Let's talk about that picture of Trump. It's a combination there. What they're going for is a Patton and a Douglas MacArthur. So right. Douglas MacArthur was famous for using the corncob pipe, but that's the General Patton hat. With
I had no idea you were so cultured in the arts
Kenny
magazine.
Glick, coming in from the back.
I was on my way to becoming a history teacher before this whole tour, and suddenly I've been here for 30 years. I don't know what happened. Yeah.
Wow, the more you know.
Very impressive, Kenny Glick. Very impressive, sir.
Thank you. That's my time.
Oh, see you later.
What's up?
So I see. I don't know if there's a glitch here, Kenny, but I'm seeing that the Nasdaq is red this morning. I'm not sure. Am I losing my vision? I
don't know, but our two stocks are going down right now. So the fade is on. You guys know about AVAV?
Yeah.
You love those drones. I believe it's a drone stock. Things been getting hammered into this earnings report, and now it's just continuing to crater. So not a bad short. But really, I was looking at the Oracle more and closely. But great
more about the Oracle
trading. Yesterday we thought the shorters were gonna, lose the complete day, but they showed up again. So we're in this wonderful trading range. I just love it. So let's keep this thing going. How's everybody else going?
That Oracle report was something else. I don't know what they could have said short of we're taking over the world that would have been any better. Right. It was their best quarter in like I think 15 years in terms of like growth.
Well, that remember 6 months ago when they said the same type of thing and the stock went down 50%. So it was due for something to hang in there on. But for us day traders, we're just looking at a gapped up stock, and it's already fading through VWAP, and it's already breaking down under pre-market lows. So some of us are shorting it right now. But take a look at AVAV. This is an interesting little setup here. So this is the reason I want to talk about it. I don't know if you guys have my charts, but I think you do.
Do what? No. Yes, I do.
Boom. There you go. So normally, my default is to look to buy stocks that are gapped down for that reversion trade. But when I looked at this chart, this is a 5-year chart. Well, I'll show you a 5-year chart of it. Just it's been getting nasty. And that's a 5-year VWAP that it pivoted off just the other day, and it had this massive news story.
How'd you find that?
How'd I find what?
The 5-year VWAP. Like, why would you have thought
the script does all the work for us? That's
no. I know, but why would you have thought to go back that far? Is my question. Like,
okay. So to due to what's the thing? A popular misconception. Yeah, we look at charts that are more than a minute chart. So I'm looking at everything. So minute, 5 minute. Then I go to monthly, quarterlies, yearlies, decades, just to get an overview of what's happening out there.
That's how you find a good Andy Dufresne.
That's how you find a good Andy Dufresne stocks. And again, that's why I love being bearish, because when they come out of those patterns, man, those are some of the greatest long trades that you'll find. By the way, yeah, I mean, I can show you some pump and dumps from the last couple of days, but more importantly, this stock, I don't really know much about it, but I know that chart looked ugly and it broke under that 5. So normally I'm a look to buyer. I'm a looker to buy. I'm looking to buy these stocks that are gapped down, but here you go. You already got a double top this morning and a VWAP break. So that's a reason to short. Then it gets back to the overnight lows. That's a reason to cover some. And now if this thing keeps going down, you could be looking at another 10 points to the downside, but very limited risk on the short now, because that's where you're going to cover is that blue line. But, that overall chart does not look too healthy. This thing could be looking at 185. So, I'm keeping my eye on it, see if it gives way a little bit more. But, not my favorite type of stock, the $200 stocks. If you're not really willing to risk $200, $250, or at least $5 on your trade, you might want to stay away from this one.
Hey, can you put up the Oracle? Show me what you're seeing.
Yeah. So yeah, I'm a fan. Again, now that we've got that monster sell-off, that this was kind of like due to react positively to the news, but you're breaking pre-market lows, you're under VWAP. So, the fade can continue, and you had a pivot right there at 160.5 last night. So you might be looking to revisit that. We'll definitely keeping an eye on this one.
If we get above that anchor VWAP, then it's a long from the upside right?
Well, right now the idea is that you might be selling off back to the prior day. So you're
leaning on the short because it gapped up.
Yeah, right. So then you got the 154 area, which could be dangerous. But those two pivots before that, that would be where you're covering on the way to the orange line. But again, I'm so glued to the overall market right now, the Qs, the UVXY. Sellers keep showing up, but the buyers keep showing up too. Obviously, we're all in this massive trading range, which is fantastic. I'm just waiting to see if it gives way. The market is right now set up for that March 20th prediction of a real crash or a correction to take root, because all we're seeing lately is glimpses of what could happen. And we keep finding buyers. So did the correction just happen on Sunday night? And is it over? I don't know. But if UVXY regains its footing again, because UVXY was over 60 Sunday night, that was it. That was the moment I was looking for. And we got the sell-off down on the Qs to 582.50, and it held. So very difficult to be a shorter still. You can make money, but, it's just very difficult to stay short. But that's, again, most of us are just day traders, so looking for the action intraday. I am a little bit nervous, again, for March 20th, because the market is setting up exactly like I thought. It would bounce. It would have this little complacent bull moment and then give way. We'll see. And again, watch that UVXY and those VIX products. They're so handy if you're a day trader.
Go trade with Kenny.
March 20th is a Friday.
That's right. It's a quad witch. I'll be in a cave somewhere in Iceland. So that's why I'm not going to be here to save you all.
Got it. All right. HitTheBid.com. Trade live with Kenny every day. He'll be live on YouTube at 11 o'clock today on our channel, Stock Market TV. We'll see you there. Kenny, go make some money.
Go Dogs. Get ready for basketball. You guys into the March Madness? I might run a tournament. So if you guys want to gamble $50 on
whatever you do, I'll be in for it. All right. I'm in.
All right. See you guys later.
All right. March is the
we
best.
talk about Bam out of bio putting up 83?
I was gonna save that for later in the show if you wanted to.
Man,
I actually watched the end of that game, JC. I watched a random basketball game in March.
He would have hit 90 if he wouldn't have missed all those free throws.
What can you do?
Hold on, I wanted to just touch on the Oracle here, and then we'll bring on James. Can you throw up the slide 2? So, Kenny shorting this on an intraday basis, unless it gets back above the anchored VWAP, in which case could be a long. But let's just zoom out, right? That's on an intraday basis. When you zoom out, you've got this tight consolidation, classic bearish pattern, right? Continuation of an ongoing trend. The book will tell you that this will break down. But if it doesn't break down, the implications of a continuation pattern doing the opposite and actually reversing the trend is incredibly powerful. And this is something that we pointed to yesterday with Strazza. Can you throw up the next chart, please? So what Oracle is doing, up 8% today.
Look at this one.
In the exact same fashion that Ethereum, just further reiterating that these cryptocurrencies are not some sort of hedge against inflation, and they're not some sort of new revolutionary some whatever. They're just software stocks, right? That's all they are. And if they want to be treated differently, maybe they should start acting differently, but they have not. They just keep reiterating that that's exactly what they are, and they're software stocks. Maybe one day that will change, but that certainly has not. So I think that the relationship here in crypto with what we're seeing in software continues to, just continues to prove that that is what it is, right? That's what it is. And by the way, I understand that this is blasphemy in certain religions and whatever. Like, that's not my problem that you put lasers in your eyes. If it was up to me, cryptocurrencies would be something different. I wish they were, but they're not. They're just more software stocks.
I think a lot of people are coming around to this idea. Although, what if cryptos are not software stocks? Software stocks are cryptos, huh? Think about that.
Now you're just twisting things around.
All right. We got James Brody in the house. JC, he's here. Should we bring him out?
I think we should. We should. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
James.
JC, good to see you. How are you?
Great to see you. I'm doing very well. How are things?
Very good, very good. I'm in London. It's different worlds. I was just thinking my background was trading interest rate derivatives. I lived in Asia for 17 years. Now I'm in energy markets. It's a long way from equities, but it's all interlinked at the moment with what's going on in the Middle East.
Well, it's a good thing that you're good at studying price behavior, huh?
Exactly.
Can you imagine being one of these fundamental guys? You know, we look at price. James, God.
The volatility in the last week, it's what we saw with silver and gold, precious metals a month ago. But yeah, Brent was going up, the oil, they were going up, the market was getting nervous, and then it exploded with what's gone in the Middle East.
And so, all right, so let's take a step back here, right? So you used to do a lot more Forex, right? Where?
Yeah, in New York, I was doing interest rate derivatives, FX with that. Then Japan, Tokyo for a year and a half. After New York, that was a year and a half. Then 14 years in Singapore. Discretionary trading, then with a fund, automating strategies. All around, as you say, all around price action. Have a fundamental view, but trade price action around that. Get caught out when I got greedy, too big of positions. And that's what we're seeing right now in the markets. But now I'm back in London, and I'm actually training the traders here, both here at Onyx Capital Group, but also with our clients. So I'm traveling quite a bit.
Man, that must have been sometime in Singapore. We had fun there. Singapore was cool.
Great place. It's a great place. I'm back there next week, actually. I'm out there on Friday, so have some nice ice cold beers.
Very central location too. You can kind of pop anywhere around Southeast Asia pretty easily. That's pretty cool about Singapore.
Absolutely, and it's a huge refinery hub as well now, and Southeast Asia is getting hit with what's going on in the Middle East. It's pretty desperate times, and I think the equity market's oblivious to what's going on, really. So it's not just the crude price that's moving. Obviously, that's moving, but what's moving far more is all the refined products. So if you look at, for instance, LNG, one port in Qatar distributes 20% of global LNG. Nothing's come out of there for over a week. Over 20%, or actually over 10 million barrels have gone offline now of crude because of the Straits of Hormuz. But a lot of this, because it's a heavier, more sour, this is not like WTI or Brent, which produces gasoline. This is much more kerosene, diesel, and fuel oil for shipping. So aviation industry shipping is going to suffer from this. We've had far bigger moves. So for instance, fuel oil last week for shipping was trading its highest price ever. And this was on Thursday when WTI and Brent were just up $8. We see gasoline was up $60 in that time as well. And the market's come back because Donald Trump on Monday spoke. He does what he typically does. He's very good. He talks first. He doesn't use up his bullets. They can release the SPR a later date. But the market calmed down. But we're actually, in the last couple of days, we're seeing more energy facilities being hit by Iran. We're seeing more oil coming offline. Overnight, I think it was US took out 18 ships that were laying mines in the Strait of Hormuz. So there's, whoops, the lights have gone out here. There's no quick answer to this. So I don't know how it plays out, but the equities bounced off Donald Trump's on his speech on Monday. Brent's starting to go up again. To me, it doesn't look good for equities. It seems that they're coming into some selling pressure here. I'm talking about the S&P. There's selling pressure around 6,800. And bond markets, actually, initially it said this is going to be inflationary, but at some point it's going to be a hit to global growth as well. And what Donald Trump needs, of course, is a quick resolution, but I don't see that how that happens, because Iran, the army, IRG seems to be in control now. They can't back down because they killed so many protesters just a couple of months ago, and Donald Trump can't back down either. So I don't see how we get a quick resolution.
What about, so who wins in this whole situation? What types of stocks are going to go up in price? Did we lose James? James, did we lose you? James, you back?
No, I'm still here. Can you hear me? I'm here.
Oh, okay. Yeah, what types of stocks you think benefit from this whole?
The market has to move into defensive, much more defensive here. I much more prefer to be buying bonds at the front end of the curve, because this will be a hit to global growth for sure. Although having said that, we did see huge volatility. If you look at the OIS, that's the derivative that prices central bank movements. In the UK 2 weeks ago, the market was pricing 2 cuts because the economy is weak. By Monday or by Friday, the market was pricing no movement. Monday, it was pricing hikes. Now we're at cuts again. So the front end of the bond curve's pricing straight off the crude price, energy here.
Right.
So yeah, volatilities in the market. If you look at the MOVE index, actually, which is bond market volatility, you invert that, it's highly correlated with the S&P, but bond market volatility has gone through the roof, which implies as well from the correlation that equities, the risk is to the downside, but you have to be really defensive. And precious metals, they're not reacting. Typically, there'd be a safe haven, but the precious metals have gone sideways all this week. So it's, and what I'm seeing as well, because of that, what you initially saw actually was a sell-off in the precious metals. So that tells me that hedge funds have pulled out the market. They've de-risked. We can see a lot of hedge funds that were trading commodities. Some got hit very badly. That's just come out the last few days. Some of the big funds has lost well over $1 billion, 2 or 3% of AUM. So hedge funds have stepped to the sideline. Of course, retail buy the dip, but if we can't break back above the 6,800 level and the market turns south, then it would appear to me that stops are going to get triggered pretty aggressively.
Let me ask you, I mean, listen, you traded Forex for a long time. You understand those markets very well. I've been looking at the strength in emerging market Forex, for example, and, as a coincident or even leading indicator potentially for emerging market stock prices, right? And that's been very beneficial, right? We've done great in some of these different emerging markets. Fantastic. And then I've seen just over the last several years, the more negative correlation between the US dollar and equities, the weaker equities, weaker dollar has been good for equities, and then you get that flight to safety into the dollar, when shit is hitting the fan in the equities market, right? So when people are talking about the end of the dollar and, all the things that they say, I wonder whether it's more the end of the dollar that's driving asset prices higher, stocks, commodities, or is it the fact that risk assets have been doing so well, particularly equities, that there is a lack of need for the safety of the dollar? It's not that it's the end of the dollar driving these things. It's that nobody necessarily needs the dollar because you got, all these other assets doing way better. Why would you need that kind of safety, right? So I'm just curious to hear from your perspective, like if you think there's any truth to that.
Yeah, absolutely. We saw the weak dollar. I mean, I think it's just about a month ago, we saw that funds had their shortest position ever in the US dollar.
Yeah.
You say emerging market equities soared. We've seen it across Europe as well. But in the last few weeks, that started to turn. The dollar started to strengthen. And just 2 weeks ago, the dollar was trading up 118.60. Now it's gone down to below 116. So the dollar started to strengthen. In fact, the last week and a half, 2 weeks, the dollar was the one asset actually that was going up, consistently going up. Huge volatility in a sell-off in, say, precious metals. Equities suffered, bonds initially sold off on the inflationary spike. So the dollar seems to be back as a sort of safe haven play. Yeah, I think the talk of end of the dollar, I mean, that was massively overdone, but people get into these themes, don't they? We've had the last few years, it's been everything from crypto, work from home stocks, mem stocks, and then, of course, gold, silver, precious metals. We've seen it, the semiconductors, and it becomes a theme that everyone jumps on board, the end of the dollar, but it's turned pretty aggressively. Now it seems to be coming back, and the US seems to be in a far stronger place right now than certainly emerging markets in Asia because of the need for refined products there. So I think for now, actually, the US is best placed for this this period of risk off that we're seeing.
You know, guys, if you could throw up the slide 9 quickly. You know, you saw these magazine covers coming out. You know, I follow these things from a sentiment perspective. You know, you're talking about how the end of the dollar is overblown. You know, I saw that the dollar in decline on the cover of Barron's, right? So
Yeah.
this was a few weeks ago. And then, of course, you know, the Economist magazine, you know, all, I mean, right there within a couple of weeks of each other. You know, we've seen this sort of thing before. Do you necessarily think that a rise in the dollar and, you know, the other side of this, that's going to be a problem for equities?
Well, we talk about this a lot, don't we? We always get these themes on the front of covers towards the end of the trend. It's when the trend's had such a big move that these covers pick up on it. But if you'd be watching the charts, you know, you'd have been on the trend for a long time. Right now, the dollar in the last 2 weeks, the dollar's been strengthening. Yeah, I think that's a headwind certainly for the emerging market stocks. But I think the far bigger headwind for them is what's going on again in the Middle East. I mean, let's put this into perspective. Companies like Pakistan, Sri Lanka, Egypt, we're already starting to ration fuel. They're talking about putting price caps in. Universities, people working from home, universities being closed. South Korea, you know, South Korea, huge in the semiconductor space. They import all their energy from the Middle East. Now they then sell on, so Australia imports 40% of its energy from South Korea, and South Korea is talking about banning exports. So you can see what's going on in the Middle East, where they get the bulk of their energy from, so for Asia, where they get the bulk of their energy from the Middle East, that's going to be a far bigger headwind to emerging market stocks and emerging market economies in the weeks ahead. And I said, even if this does get resolved today, it's going to take weeks into months to get the Middle East and the refineries rebuilt, the energy terminals that have been hit, to get them back online and to get the traffic flowing through the straits again.
I wanted to just kind of take you back. You know, you made a great point about how these magazine covers tend to be towards the end of the trends. I wanted to ask you about emerging markets. You could see here, this was at the end of 2022, within a week of each other. Can you guys throw up that slide too? Within a week of each other, you had Bloomberg Business Week, can't stop, won't stop. The Fed has turned the US dollar into a wrecking ball, and there's no end in sight to the carnage. And then, of course, the powerful greenback, George Washington, jumping out of a dollar bill, flexing his biceps, wearing a tank top. And so if you go to the next chart, you can see that immediately thereafter. So the dollar, as it turned out, had already peaked a week earlier, right? So the dollar fell apart from there, and now we're getting the other magazine covers. So, you know, when you talk about the implications, particularly towards emerging markets and Southeast Asia, are there any areas in Southeast Asia that you're seeing that can do well regardless of a rising dollar? Or do you think that they're just all vulnerable to the USD? And, you know, if the dollar's going up, none of these things are going to work.
It's all vulnerable. I mean, I know you've traveled around Asia a lot. You know, these countries, Vietnam, Cambodia, and so on, a far bigger proportion of consumer spending goes on energy, heating, petrol. Everyone's on scooters. Then there's far less discretionary spending. So that's why the Middle East and the energy price going up so aggressively has such a big impact on the economy.
And so what about some of the developed areas? You know, like maybe something like Norway or something like that, you know, some of the beneficiaries of this sort of thing. Anything there?
I think the big beneficiaries are going to be commodities, because what's going to happen after this is the world was already looking at spending or investing more in gold and silver. We know this, central banks were diversifying their reserves into gold. There's going to be far more focus on the need for energy security and just commodity security, food as well. So another point, if you look at the Middle Eastern countries, Bahrain, Qatar, UAE, they import the vast majority of their food. It's okay for now, but that can come a bigger problem as well the longer this takes place. So, commodity
So
companies.
the energy commodities themselves, commodity super cycle, you're a firm believer.
Absolutely, absolutely, and partly just
let me ask you something.
security.
This is important. This is important because this is a psychological question, and you're a seasoned vet, and you know all the psychology guys and stuff like that. As an energy guy, right? Because you were a forex guy, now you're an energy guy. As an energy guy, how do you avoid being like an energy pormer bull, or being like, kind of like leaning on the optimistic side because you're so like entrenched with it, right? Like that surroundings, bias, right? And all of those heuristics that we, learn about and think about. Like, how do you overcome that, or do you find that easy? Like, I'd love to hear your thoughts on that.
Yeah, again, it comes back to looking at the charts. So a really good point. About 2 months ago, the energy was going down, crude was going down. WTI, we look at Brent. There's oversupply. There was a global oversupply. Demand was falling. China economy is much weaker than they want. US, the data, unemployment started to tick up. There's concerns around the economy. Do the Fed need to cut more? So energy price was going down, and it stalled. The Brent had a double bottom, more technical analysis around the $58 level. It started to pick up about 3 or 4 weeks ago. Clearly, the market responds to news before the news comes out. And then we have these events that are massively bullish. So, yeah, I was bearish 2 months ago. We've been bearish. We could see the global economy slowing, particularly from Asia and China's perspective. But now we turn bullish, and you can see if 10 million barrels per day have been taken off the global supply, you can add the SPR, release some of that will help. And for sure, the IEA have talked about that today. Donald Trump will do that if the prices start to go up again. That's a temporary band-aid on the situation. But again, it's the price action. And going back to my trading days, whenever I lost money, it's because I got stubborn with my view and the price action goes against me. The market's never wrong, and the price is the final arbiter of your P&L.
You hear that, folks? You hear that? Listen to him. The price is the final arbiter. I mean, it doesn't matter what Brody thinks or what JC thinks. The price is going to do what it's going to do.
Yeah, sadly, the market doesn't care what we think. The price does what it does. Donald Trump, he can influence it, but it will keep doing what it does.
All right. So you like the metals. What about the base metals versus the precious metals? You thinking copper? Or are you sticking with the gold and the silver? Maybe. How are you viewing that?
Yeah, I love that. So I made a big case about copper and uranium. Obviously, not a metal, but they're two big stories for the next 15, 20 years. We know there's going to be a 10 million ton shortage of copper going through to there's a supply surplus this year, but then we start going into shortage through to 2040. Copper's big in EVs, it's big in data centers. We know there's a shortage. I think in the US, the statistic I heard, it takes 27 years to bring a copper mine online. And the copper that we're mining right now is weaker and weaker grades. So we know there's a shortage of copper going forward, so I love it. But having said that, the last 2 or 3 weeks, copper price has been going down. So again, you have to trade, you have a fundamental view, but you have to trade the price action. The other big one is uranium, I love, because data centers need power. Where are we going to get it from? There's already a big shortage. In the US, household, electricity prices are going up because of the demand from data centers. That has to be addressed. The only way is from nuclear power, so uranium. So I like that. But going back to, I like gold because central banks are diversifying their reserves. We've been through that, and again, back to the charts. When I first joined Onyx here, we had a podcast. I talked when gold was at 2080. It was a quadruple top. I said when it closes above there, it's a buy, a classic breakout like the turtle traders did, like Darvas. Then it got to 3,450. It went sideways. When it broke again, it was a clear buy signal. But as we say, we have central banks diversifying, and if the Middle Eastern tensions do increase, then certainly there'll be that's another opportunity to buy. Because we had massive volatility just over a month ago. That's died down, and I think 2 days ago it started to pick up. That was telling me money can come in. Of course, the smart money, the hedge funds, they want to steer clear when you get the huge volatility. We've seen it this week in the energy sector. Everyone's de-risked, but when vol comes down, then they start to come back in, and so those look like the areas that I like to invest in.
Chat's loving the conversation. Appreciate you guys. We're getting a question. They want me to ask you about the England soccer team. I didn't know England had a soccer team. No, I'm just kidding. So is there anything we should know about the English soccer team? Are they any good?
They're pretty good. They're getting better. I follow more the English rugby team. We have the Rugby World Cup in 5 years in the US, the United States. So that will be good. And we're starting to hit American football matches in London as well. They're getting a bigger and bigger following.
100%. I remember the first one was Dolphins Giants back in the day. My parents went, and they were like, wow, people really love American football over there. And they've continued to add more countries and things like that. So I think that's super cool. The players are like, oh, we have to travel overseas. Oh, you have to travel overseas so you can play your football game and get paid all your millions of dollars. Yeah, I feel real bad for you. Get on the goddamn plane. You're in better shape than anybody in the world. You'll be fine. Go play.
Live your life. Exactly. I got hard done by, though, when I worked. I was in New York for a year and a half, and I moved there in April, and they took me to opening day of the baseball. The whole desk, they were Mets and Jets fans. So I went to a year of Mets and Jets. It was a tough year. I got to the Subway series.
Usually is.
I got to the Subway series, which was good.
Oh my God! Can we drop James's Twitter handle there on the chat? The chat is asking. They're like, I want to follow this guy on the Twitter.
Okay, we just set up. I do most on LinkedIn, actually. I do a daily update on LinkedIn. So I'm James Brody, CMT. You'll recognize the bald head. And just set up an Instagram account, actually, fluxinstitute.trading. So again, we do the daily updates of what's happening across the global macro space. So it's quite a good overview, big picture before you drill down into which equities you want to invest in.
Yep. Listen, I love it, James. Chat's loving it. When are you coming into the States? When are you coming to New York?
We just opened an office in January in New York, actually. So
Where?
I should be over in, I'm not sure exactly where it is. I haven't been there yet. Again, we're expanding. We opened Dubai last year, Zug, we're a big Singapore office. I have a training room, actually, Singapore and London, but we got a New York office, just starting trading power and all the energy products. So Amazing. I'll be there shortly. I'll be in touch when I'm over.
Please do. I know all the best omakase spots in New York City. I'm telling you right now, I've gotten really good at this, so I got you. Excellent.
I'll extend on my stay. I'll make it a few more days.
Do it. I'm telling you. Please.
Excellent.
All right. James Brody, ladies and gentlemen, the man.
Thank you, JC. Good to see you.
Likewise. Dude, you should have seen Spencer, us in Singapore. You like it? Did you enjoy that conversation?
That was wonderful. Yeah.
Oh, good. Yeah, dude, we were in Singapore, and I gave a presentation at the Bloomberg there, which is sick, by the way. And, dude, this room had like 200 people in the it's like a big conference room in the Bloomberg there. Mm-hmm. And we go, we had a couple of drinks up there, and they're like, hey, we're gonna go downstairs. We show up downstairs, there's a huge bar. This is not on Bloomberg, there's another bar down the block. Dude, beers everywhere, on buckets, food everywhere. I'm like, dude, you guys know how to party. Like, they were like showing us up. The New Yorkers. In New York, we don't party like that. Man, these guys had some setup. Then I go over to Malaysia. I'm in Kuala Lumpur. I give a presentation. They take me for pizza. Can you believe that?
Okay, listen.
They take me for pizza
to anyone watching this right now, if you are ever in a situation with JC and a restaurant is in your plans, don't take JC to get pizza unless you're in New York or Connecticut or New Jersey. Those are the exceptions. He will be very offended. JC to get pizza.
But I'm in Malaysia and they take me to get pizza. They're like, "Oh, I thought that's what you guys eat."
Well, they're not wrong. They're not wrong.
They're not wrong, but I'm not
listen,
trying to eat pizza in KL. Hello.
Listen, Raheem, I don't know if James is looking for new interns, but go here. Let me put the link in. This is to his Instagram. I'll put that in the chat as well. And maybe you can connect. I don't know. But that was some good feedback that James just got there. The chat was loving it. Couple of things before we go. I know the market's just opened. I want to bring up a chart that I saw. This is actually from last week. It was from the UBS what's it called? The annual global investment report that they do. I forget the exact name of it, but one of my favorite all-time charts is that chart that's called the Wall of Worry, that just shows like all the bad things that happen over time, and the S&P 500 goes up, in spite of that. This chart is very similar to that. I think in light of what's happened in the past couple of weeks with Iran and all that jazz, this is just showing all the geopolitical risk going back to 1900, the major ones, not all of them, the major ones going back to the turn of the last century. And it just, we've seen this before, right? It's good to remember that wars happen, and it's not the end all be all for markets.
This is officially called the Gaza War?
No. That is referring to the actual conflict in Gaza, not what's happening in Iran, I think.
Got it. It's just being grouped together.
I think, yeah. And then this was a good one too. This was good. So this is showing the industry weightings in the US and the UK in 1900 versus today. Okay, it's a little hard to see. I'll make it bigger for you. And look, obviously, the first takeaway, look how similar the US and the UK markets were in 1900. They had railroads, they had banks, they had industrials. That was more or less it. Some other stuff too, but those are kind of the big three. Look at today, right? Stark difference, right? One country has a shit ton of technology. The other doesn't. The other is pretty much half financials.
What do you think the Brits' beef is with tech? What's the story there?
I don't know, but it's funny in looking at that circle on the bottom right. They had to break out the financials because there's banks, but there's also financial services, but there's also insurance, right? So there's three different financials in that circle. I don't know what the beef is. Maybe we should have asked James. Damn.
What's the beef with technology?
What's the beef?
The London FTSE 100 is 0% technology right now. It's less than 1%. It's like 0.9% tech, something like that.
Yeah.
What is the beef?
I don't know, but I thought this was just a great chart, just kind of showing that, we were near identical to the UK in terms of weightings 125 years ago. Although the craziest takeaway from this, according to this report, this is from UBS, this is the Global Investment Returns Yearbook. I'm going to read directly from it now. Railroads, despite being a declining industry over the period of the study, because railroads fell from 63% of the U.S. to less than 1% today, railroads actually outperformed both the U.S. stock market and their newer technology competitors if you start measuring in 1900. So if you start from 1900, railroads still outperformed in spite of the fact that they got replaced by everything else over the ensuing 125 years. So I thought that was a wild stat. So
Spencer Israel coming in hot with the nice charts today. I see you, dog. I see you.
Not my chart. I want to give credit to UBS. This is the beat sheet from the beat report. Do we have that up? Yes, we do. Hewlett Packard. It was kind of the Hewlett Packard Enterprise. Sorry, there's two Hewlett Packards. Hewlett Packard Enterprise was the only really reaction worth highlighting yesterday. We're sort of into the back end of the earnings season now, so did not have a good reaction. I think that top kind of speaks for itself a little bit there. But do we have the calendar as well? There we go. So we had Oracle last night. that's kind of the big one. There's some software tomorrow. We get Adobe. There's some retail tomorrow with Dick's Sporting Goods and Dollar General. But we're sort of coming into the end of the earnings season, which is okay. But there's going to be a steady trickle pretty much for the next couple of weeks of just one or two important big ones a day. And if you want to stay on top of this thing, the guys over at the Beat Report are making trades around earnings reports before and after, right? So I'll put the link up in the chat if you want to get the trades that result from these reports, because it's not about the reports. Remember, it's never about the reports. It's about the reports and the reaction.
No, it's a great point, because soccer 5105 is saying Oracle not worth mentioning. Robert talking about Oracle zooming, because remember, that just came out. So
right.
Today is the day that is being judged, right?
That's
so
right.
Yes, so far so good. I suppose from the long side, we'll have all the data at the end of the day and what it means relative to past reports and where it fits on the B report. And I'm looking forward very much so to having Strazza on the show telling us exactly what went down.
Right. And so here's the thing, right? Every headline right now says Oracle rips higher on earnings, right? Oracle gaps up, Oracle opens up, whatever percent they opened up today. But if you're paying attention when Kenny was on, Oracle has been trading down kind of all morning.
Yep.
I mean, it just ripped higher off the open. But from 9 o'clock last night until just now, basically, the market open, Oracle was down, right? So, yeah, we're at the high of the day right now, but the day just started. So this all has to be priced in. And the headlines are not trustworthy in this regard. You have to wait.
Big day for Oracle for sure, particularly with that relationship it's got with Ethereum and everything that we looked at before. All eyes there, guys.
Yeah. So shout out to Steve and all his work at the Beat Report. All right. Let's just do a recess because we actually have a recess to discuss today. What can you say? Bam Adebayo. I don't watch a ton of sports really, but I was watching at least during the week. But I was watching the fourth quarter last night, JC. I saw it on my phone. I was like, I gotta watch this. This is historic. So 83 points. I've never seen a team that was winning by a lot in the fourth quarter intentionally foul basically the other team so that they can get the ball back to give the ball to their guy so he can get fouled so he can shoot more free throws. It was just kind of crazy. But just a wild. That's what sports is about. It's about seeing cool shit that you haven't seen before. So that was fun.
100%.
That was a lot of fun to witness.
They saved the ball, so the ball exists. This is
Yeah.
the second most points scored in the game ever in NBA history.
83 points.
83 points. I think Kobe had 81.
Kobe had 81.
And then Chamberlain had 100 in Hershey, Pennsylvania.
Mhm.
And my understanding is that one of the little kids grabbed the ball and ran out of the arena, who lived in Hershey at the time, and kept the ball and played with it for years after that. But that's the story of what happened to that ball.
Most points in an NBA game for which we have a video record that it happened. But there's no proof.
True.
There's no video proof that Will
True.
did it. We're just taking
Most
everyone's
video
word for it.
proof.
Yeah.
True.
Right.
True.
Yeah. All right. I thought it was just a really cool moment. And then not as cool a moment was the Team USA losing in the World Baseball Classic. So we'll see what happens tonight. But go sports. It's March. It's the best sports month of the year. We're going to hop out of here. It's 9:40. We got Kenny Glick going live at the long and short of it. That's today at 11 o'clock. Jeff Mackey normally goes live. He's doing some intense boots on the ground research in Spain. He'll be back next week. And then we'll have Riley going live at 5. There is huge
Who's in
news.
Spain?
Jeff Mackey.
Oh, Mackey's in Spain.
Yeah. Riley Roseby's going live at 5. There is some pretty big news in the eVTOL world this week regarding the FAA and some contracts that they gave out. Riley has it all covered today. 5 o'clock, Godspeed Live. We'll see you there. Thank you to James Brody. Thank you to Kenny Glick. Thanks to everyone in the chat for joining us. Tomorrow morning, we're joined by Jason Shapiro. So
Nice.
gonna be a good one.
Nice.
Where's Mary? Mary will be on the show next Wednesday, Mark Sebastian. How about that? Thank you everyone for watching. Drop us a like. It's the thumbs up on YouTube. I'd appreciate that. Go make some money, and we'll see you.
YOLO responsibly.
Always, always, always.
Okay,
That's the lesson. That's the lesson to be learned. Oh, I didn't end the show. What happened, JC?
I don't know.
I don't know.
I can't take no